All right, thanks very much for that. Let's take the discussion on markets, COVID, economy, all of that with Piper Serica's Abhay Agarwal joining us now. Abhay, good afternoon. Thank you so much for your time. The market is actually playing very resilient, even to the unfortunate second wave, which seemed to be panning out in our country, big cities, and of course Maharashtra, things are severe. Though the government and the authorities are doing best to accelerate the vaccination drive and partial lockdowns or stricter norms as well. But the resilience of the market is surprising some. How are you analyzing it?
I think it's quite interesting what you say. We have been also watching it with some. I mean, as investors, long-term investors, we don't really look at short-term events. But my guess here is that what happened is that when last year, same time, a lot of people panicked, exited the markets, and then Nifty went up 70% in last financial year. So people are, first of all, not exiting because they believe that this time, while there is a problem, number of cases are going up, this wave will kind of, figure its way out maybe in April, maybe sometime in May. And then they're looking beyond that. That's the sense I get because we are, in fact, last year when there was a lot of emotional pressure on investors, this time we are seeing a lot of urgency in putting out money. So people who are under allocated are actually using this opportunity to increase their allocations.
Right. Abhay, we're also on cusp of starting with the earnings and the number season as well. And looking at the Q4 operational updates which have come in, steel is doing very well, as we can see right now, and the numbers were good. But how did you read other operational updates, and what is your sense? Do you think the earnings momentum will continue this quarter as well?
Yeah, I think barring the lockdowns, which are still regional in nature and not as wide and pervasive as we had last year, I think there is this tremendous desire from the corporate sector that we should maintain things as they are, keep the factories open, meet the customer demand, because the customer demand is pretty strong at this point of time. And I think that is driven by a couple of things. One is that there is, of course, a pent-up demand. The amount of savings with the HNI category have gone up dramatically because last year they didn't get an opportunity to spend too much money on discretionary items. So we are seeing good demand from real estate. In real estate, we are seeing good demands in autos. So my view is that this last quarter's earnings, the quarter which went by, will of course be pretty strong from a low base of last year. But the current quarter earnings, the one we are in, will actually again surprise people on the positive side, especially for the larger companies that are leaders in their space. The weaker companies my view is that will continue to lose market share.
Right. How did you read the RBI commentary? In fact, even the worry on rising yields in US seemed to have calmed down after a round of commentary from Yellen and Mr. Powell as well, that rates will remain lower and there will be ample QE, of course, is there, but the infra bill, which will also kick up a lot of capex there. So yield clearly no longer is a worry for global markets. But back home here in India, government and RBI too have managed to calm down the yields very well. Plus so many other announcements on liquidity front and OMO and LTRO from RBI governor yesterday. How did you analyze it as a market participant?
No, I think the low yields are going to stay for a very long period of time, because I think in a world that is still working its way through a pandemic and then the rehabilitation phase after that, I don't really expect in next couple of years the yields to go up. There will be volatility. So 10-year GSEC in India may at some time spike to 6.5%, 6.75%, but I think it will stay around 6%, maybe slightly lower also. There is ample liquidity in the system. RBI has guided that it will provide liquidity. Banks are flush with cash. CASA deposits have gone up for almost all the banks that we track in the last quarter have reported robust CASA deposits. One of my colleagues just borrowed from a very large bank, 20-year home mortgage at 6.75%, which is the lowest ever I have seen. So I think with that kind of abundant supply, yields may become volatile, sometime event driven, but otherwise I think for next couple of years, investors should not worry about any rapid rise in yields, including the US yields, because nobody especially if you're a regulator, especially if you're a banker, central banker. You don't want to rock the boat at times when the economy may struggle again and people will struggle again.
Abhay, I would like to play a slice of a conversation we were having with Policy Bazaar CEO earlier on the show, and I'd like your thoughts on that entire platform space. You own some names, you track that very closely. Let's play that conversation of Policy Bazaar CEO earlier, and then we'll chat about that.
Sure.
With the COVID and everything else, I think health insurance, has been top of mind for consumers in India in the last year. So if you just stay with that for a second, what we've seen is that health insurance, has grown very strongly this year. In fact, at the end of this year, it's quite likely that health insurance will be larger than motor insurance in general, in the GI category. So which is quite a big step, because traditionally motor insurance has been significantly more than health insurance over the last, many, many years. And finally, I think as people have understood the need for health insurance, the need for the fact that hospitalization costs can be very high, that has broken that inertia, and people have started buying more and more health insurance. So I think that is health insurance is a good way to look at the broad trend. So the two main trends I would just say are that people are buying more and more protection products. So that is health insurance, term insurance, and people are buying things digitally. So I think that I'm sure is no surprise to you and your view.
Now, Abhay, you researched this space very well, and in fact, indirectly via InfoEdge, also playing Policy Bazaar and Zomato, both are IPO bound. What are your thoughts here in terms of earnings trajectory and the way market has been, valuing these kind of companies? What are your thoughts there?
Yeah, I think the whole consumer internet space, whether it is selling insurance, food delivery, any business that is leveraging technology, I think these businesses in India are going to become very, very valuable over the next 2 to 5 years' time. And what has happened is, in a small market like India, leadership positions have got established actually pretty quickly. So if you look at food delivery, it's Zomato and Swiggy. If you look at Policy Bazaar is pretty much the leader.
Abhay, I also wanted to understand from you, because you in personal capacity also analyze startups and invest there. There have been almost 6 unicorns which have been made, dollops of liquidity coming in. Meesho, Cred, Grow, Baiju of course is a big one. The way long-term institutional money is actually coming into the Indian unlisted startup technology side. What do you make of that? It's coming off. Do you think our Indian IT technology-backed startup ecosystem is coming of age and is getting recognition on the global scale now?
No, I think it's been getting recognition for many years, and we have seen, while you're seeing unicorn level valuations now, I mean, these companies have been raising rounds of starting with $10 million and $30-40 million, and then Swiggy recently raised $800 million. So frankly, India is really a hotspot as far as global investors are concerned, who think that the private companies which are using digital technologies to disrupt a lot of traditional industries are going to create value. And I think that momentum is only going to pick up pace. There will be periods of overvaluation, extreme competitiveness between investors. But barring that, I think the good thing for the country as a whole, for the entrepreneurs in the country, is that if they are successful at an early stage, there is no scarcity of capital. I think tremendous value will get created from unlisted companies. And as they will go and list, we are expecting at least 10 such companies, unicorns, to list in the next 12 to 18 months. I think the retail investors will also get a great opportunity to participate in them.
Right. Abhay, thank you so much for your inputs today. We will analyze all of that after this very short break. In fact, the entire IT space also is buzzing because of the commentary coming in from industry observers like Gartner. But I really appreciate your coming on the channel today and analyzing and sharing your inputs. Time for a short break. More analysis on the other side.